All right, on this video, I'm going to be talking about buy, repair, rent, refinance, and I'm also going to show you why a lot of people get this wrong. Okay, so the most important thing to understand with buy, repair, rent, refinances is that you as an investor do not have unlimited capital. So as an example, if you want to buy a $200,000 house with a regular investment property loan, you would be required to put 25% down. So if you put $50,000 down on a $200,000 house, the bank will give you a mortgage for $150,000. Now keep in mind, I'm talking about investment properties, not properties that you live in. In other words, properties that you have as rentals where tenants are living in and not your primary residence, right? So in that scenario, investment property loans require 25% down. So on a $200,000 house, that's going to be $50,000 down and a loan for $150,000. So let's say you had $50,000, you wanted to invest in real estate. You could go the traditional route and find an investment property, put $50,000 down and get that mortgage for $150,000 and have yourself a rental. The problem is now you spent your $50,000, you're done, you can't buy any more real estate, right? So the question is, how can you buy unlimited amounts of real estate? And the answer is by using this exact same strategy and flipping it on its head. And the reason you can do this is because there's a little bit of a loophole. And the loophole is this. When you buy a property for the first time with a mortgage, the requirement is that they are going to lend to you based on your purchase price, right? But when you refinance a mortgage, this is the loophole, right? The refinance allows you to refinance based on appraisal, not what you paid for the property. So if you can buy a property for cheap, right, and then fix it up and then turn around and refinance it, you can put yourself into a situation where you can sometimes buy real estate with absolutely no money down at all. So using the same example of a $200,000 house, that you would need to put $50,000 down in order to get a $150,000 mortgage. So we know if the house appraises for $200,000, the bank is willing to loan you $150,000. So now all you need to do is find a house in that same neighborhood, very similar house. It could be the house next door. Maybe some kind of situation happened. It was a hoarder house, or maybe somebody died. It was a probate. It's been vacant and boarded up. The house is in really not great condition, and it's all original, 50 years old, needs to be updated, kitchens, bathrooms, flooring, etc. So you're able to make a cash offer. Let's say it's an REO or a bank-owned property. It's a cash offer only. And instead of paying $200,000, which is what the property would be worth fixed up, you offer $120,000 for the property in the unsightly condition that it's in right now. And the seller accepts your offer. And now you come to a private lender like me and say, hey, Lex, I'm buying this property for $120,000. If I put $20,000 down, will you loan me the $100,000? I say, sure, absolutely, I will. And I do that very routinely for my coaching students, right? So you got your $20,000 down, I've loaned you $100,000, and you bought the property for $120,000. You're then going to go and remodel the property. So you're going to redo the kitchens, redo the bathrooms, redo the flooring, put some new appliances, and you're going to make it really, really nice, all right? So let's say that cost you $30,000, around $25 per under air square footage. So essentially, if it's a 1,000 square foot house, figure $25,000, another $3,000 or $4,000 for appliances, $30,000 all in. You've renovated that house. It looks beautiful. All right. So now you've purchased it for $120,000. You spent $30,000. Your total cost is $150,000. Now you order up an appraisal, and it appraises for $200,000 because that's what houses in that neighborhood go for. So now that it appraised for $200,000, the bank's willing to lend you $150,000. So they say, we'll lend you $150,000. You've got to pay off your loan to me for $100,000. That leaves you with $50,000. That $50,000 then goes back to pay yourself on your original $50,000, which was $20,000 down plus $30,000 for repairs. So essentially, once you've pulled your $50,000 back, you've purchased that house with no money down. Now, obviously, I'm oversimplifying this because there are closing costs and insurance and carrying costs. And when you do the refinance, there are refinance costs. But the point is, you can buy a house like this with no money down or with a very little money down. Meaning if that entire deal costs you $4,000 or $5,000 in closing costs and points, then you're controlling a $200,000 house for only $4,000 down. Where this gets very exciting is when you start using leverage. So let's say, as an example, you got decent credit, you got a Home Depot card, you bought all the materials from Home Depot on the Home Depot card, you're paying your contractor on your credit card, and you borrowed the $20,000 down from your mom. Now you've just done a deal using completely all borrowed money, and then when you get the $50,000 back, right? The bank appraises it for $200,000. They're willing to loan you $150. They give you $150. You pay off $100 to me. You're left with the other $50. You simply pay off the Home Depot card. You pay off your credit card, and you give your mom the $20,000 back. The best part about this strategy is, if you remember what I said at the beginning, you cannot buy unlimited real estate. But with this strategy, you can, because now you can go back to your mom and say, hey, mom, do you want to do this again? I'll pay you 10% interest on that $20,000. And she says, sure. And then again, you go and you find another property. You come to someone like me and say, hey, I'm buying this property for $120. If I put $20 down, will you loan me $100? I say yes. And you do the process all over again. You use the Home Depot card, use the credit card to pay your contractors, and then as soon as you've refinanced and pulled that money out, you do it again. You can actually do this 10 times. In other words, currently the Fannie Mae loan limit for doing this is 10 properties. After 10 properties, they're going to say, nope, you've got 10 properties on your credit report. You're now going to have to buy properties in an LLC or in an entity. But when you start out, you can buy your first 10 houses like this. So the real challenge is not to think that you can't buy real estate because you don't have money, or not to think you can't buy real estate because you don't have great credit, right? What you have to understand is, if you find a good deal, if you find a $200,000 fixed up house, we call that in this business ARV, or after repair value, that you can buy for $120, then you need to understand that there's people like me that will lend you $100 on that, and I don't really care about your credit, because the collateral for me is the house. And if you don't pay me, I get that house, and I would love to get a house for $100,000 that's worth $200,000. So I don't really have risk of you, because that house is my collateral. So the key thing is, once you understand that you can buy houses with no money down using the strategy, which is called the buy, repair, rent, refinance strategy, right? Then you understand that you can essentially buy unlimited amounts of real estate. So the only thing that's hampering you from buying unlimited amounts of real estate is finding houses that you can buy for $120 that are worth $200 fixed up, all right? So going through the buy, repair, rent, refinance strategy again. First step is to buy. You've got to buy right. So keep in mind, if the bank is willing to lend 75% of the value of the property, then your all-in costs, including purchase price, closing costs, points, fees, plus repairs, needs to be no more than 75% of the after repair value of the property. So that's the buy, right? The repair is when you spend the $30,000 fixing up the house and making it rent ready, right? Then you have the rent, right? So buy, repair, rent. And then once you've done that, you go to the bank and say, hi, Mr. Bank, I've got this house. It's appraised for $200,000. I have a tenant and they're paying $2,000 a month. And I would like to refinance my mortgage because I'm paying this guy Lex, 12%, and I'd like to do it at a much lower rate. All right, so that's buy, repair, rent, refinance strategy. A lot of people out there, including many real estate gurus that I see, that badmouth the strategy or say the strategy doesn't work or doesn't make sense. This is the number one way for you to build wealth and create financial freedom. So make sure you understand the strategy and understand that your limit of how much real estate you can buy is not limited by your credit, and it's not limited by how much cash you have in the bank. It's limited by your ability to find deals at a discount. And in order to do that, you need to learn how to market to motivated sellers. So if you can do that and learn how to find houses like this, then once you get these houses under contract, you can figure out what you want to do with them. You can wholesale them. You can fix and flip them. You can keep them. You can rent them. You can even turn them into Airbnbs. And if you do Airbnbs, then instead of buy, repair, rent, refinance, it's going to be buy, repair, Airbnb, and refinance. And nowadays, there are lenders that will actually lend you when you fully acknowledge to them that it's an Airbnb property. And then it's on steroids, because now your cash flow, instead of $2,000 a month, might be $6,000 a month, right? So it's a great wealth building strategy. If you use buy, repair, rent, refinance with Airbnb, not only can you build wealth, but you can also build your cash flow at the same time. So make sure that you have buy, repair, rent, refinance in your arsenal. It's a very, very powerful strategy. And if you're looking to get to financial freedom, if your financial freedom numbers, let's say $30,000 a month, then all you need to do is have 10 rentals that pay you $3,000 a month, own free and clear, and you've achieved financial freedom, right? So buy, repair, rent, refinance is definitely a tool you want to have in your toolkit. And it's the greatest way that I know to create wealth. I used it myself. My home study course talks about the first 10 houses that I purchased with no money down, and I'd like you to learn how to buy houses with no money down. All right, guys, so if you enjoyed this video, please go ahead and hit that like button. Make sure you subscribe so you can see future videos that we put out on our channel. And looking forward to putting out more videos for you guys. Feel free in the comments to let me know what topics you'd like to learn more about or any questions that you have about this video. And I will see you all on the next video.